Hey guys, you're welcome back to another session. You're welcome back into another session. So today we are continuing with the session 2 of the commission that we started yesterday. So that's our discussion that we are going through. So you're welcome back once again. So let's enjoy this lesson. So let's invite friends to join. Make sure to like this video. If you haven't liked it, subscribe to the channel. If you haven't subscribed to it, and then also share with your friends so that they can also join us in that case. So let's keep on sharing so that others can join us so that we continue or start very soon. So you're welcome back. If you just join us, you're welcome back to this session. So let's keep on sharing and then invite friends to join us. Subscribe and let's go. By this, once we go live, you'll be the best person to get it right away. So let's keep on inviting friends and then they will join us soon. Alright guys, so you're welcome back once again to this section. So to yesterday, we started with the concept of commission, right? And then we were able to get to know that commission is actually an amount that we pay to someone or individuals that engage our services, right? Whether an individuals or what an organization is, and whether we pay to individuals that perform certain services for individuals or an organization. That's why we said about commission. And then also we're able to know the essence why commissions are instituted within an organization. Instead, commission is one of the sales incentive that is used to boost the morale of what an agent or an employee in order to work very hard to increase productivity and also to serve as a motivation to increase the morale for these employees to work very hard and also to earn what a better salary or better earnings at the end of the day. So we said it's for the employee or the agent to earn a good returns and also for the productivity of what the organization. That's what we said. And also we also discussed the issue about the types of commission, and we get to know that before we come to the types, we get to know that when it comes to how we calculate commission is always the sales that you made for the period multiplied by the rate of what commission. Is always the sale that we made for the period multiplied by the rate of commission. I hope that's always learned as of yesterday. So if you couldn't able to join us, the link, the description of this video, the link is very there. You can actually go through after we are done with today's video. So that's why we said that commission is always calculated as what your sales multiplied by the your rate of commission. And we made us aware that at any time there is a level that an employer will set for an employee to achieve, at the end of the day we call it what a quota. So quota is basically a certain level that an employee must earn or achieve in order to earn what a commission. So we say where quota exists, commission is calculated as commission amount multiplied by the rate of commission, where commission amount is your sales minus your quota. I hope you remember that. This is what we said that of yesterday. This is what I'm talking about. Yeah, this is what I'm talking about here. That we said that where quota exists, our commission amount, our commission is called commission amount multiplied by the rate of commission, where commission amount is what sales minus what quota. And then also able to solve some examples in relation to what commission. Is that okay? So we also get to know the types of commission that exist within an organization or that organization can institute as part of their payment salary, or as part of their remuneration methods or strategies to implement in order to motivate employees to work very hard and also to increase the productivity of what employees. So we get to know some of the types of what commission, and then I think we discussed 3 of them. We said the first one was a straight commission, where this form of commission is where an agent or employee earns commission as a salary at the end of the day. So it's always per the name is straight. So we calculate our rate of commission based on the sales that you made for the period. And also discuss what we call salary plus commission. We say the salary plus commission is where an individual earn their total earning for the day to include a salary plus what a commission that for achieving certain level of what output. So that is what we said about salary plus commission. And then also to discuss the issue about salary plus commission plus what bonus as another form of what type of commission. So we said that with this form of what commission is where an individual earns their total earnings to include salary that they earn for a particular period of time, bonuses for exceeding certain amount of what sales limit that they are set, and then commission for achieving certain level of what target as sales for the period. So that is where we ended that of yesterday, and we saw even examples to clarify this whole issue. So if you couldn't able to join us of yesterday, please right after this, make sure the link are in the description of this video. Make sure to go through. Right after that, you can watch everything so that I can get everything that we started that of yesterday. So today we are going to continue with the next type of what commission, and that is on what we call graduated or differential what commission. It is called what graduated or differential commission. So you are welcome back to this section. If you are just joining us, you are welcome back to this section. So you know what to do. Kindly make sure to like this video, all right, share with your friends, and you haven't subscribed to this channel, make sure to subscribe. So by this, once we go live, we upload any the video, you'll be the first person to get it right away. So let's get started and then continue with where we left off that of yesterday. All right, so we are continuing with the types of commission that we started yesterday. So let's see how we can go through in that case. So you are looking at, let me bring my camera here. So we are looking at the graduated commission as another form of what commission when it comes to business, instituting commission as a way to motivate employees to work very hard and also to increase the productivity within an organization. I hope that is clear. So when it comes to graduated commission, per the name here, we are saying that we graduated commission is where commission is paid at different rates for different levels of what output. So we are saying that the graduated commission is where different rates are paid for at different levels of what output of sales that you made for the period. So it's a type of commission in which total earnings of a sales agent is based on commission rates for different levels of what sales. So as I said, so you can call it graduated commission or differential what commission. So it's a type of commission in which a sales agent earns his commission at different rates with different levels of what sales. Is that okay? So let's say you work with, let's say, LPC company, right, and you are paid on a commission basis. So let's say at the end of the day you're able to make the sales of, let's say, 20,000. Is that okay? So with this 20,000 under graduated commission, you are not going to be paid a fixed, or let's say a one-time commission rate on this sales, all right, but then we are going to separate or segregate or segment this number of sales that you have it here into various what different levels of sales, and then we are going to apply different rates to pay the commission. That's what we call what a graduated commission. So in this case, let's say you're gonna break it into, let's say, 3 sections. Let's say first one you are paid what, first one is going to be, let's say, 10,000, all right, then let's say the second one should be, let's say, 7,000, and let's say the last one should be 3,000. So let's say 10,000 you are paid, let's say, 10%. All right, let's say 7,000 you are paid, let's say 9%, and let's say the third or the 3,000, let's say you are paid 5%. This is what we call what a graduated commission. Here, different sales are actually instituted, and then rate at different rate is being applied on these sales. So it's where commission is being paid at different rates with respect to different what levels of sales. That's what we call graduated commission. I hope that is clear. So that is the issue about what graduated commission. So if there's any question, let me know in the comment section before I continue. So let's take our first example on graduated commission. Let's take a for example on graduated commission. For example on graduated commission. Okay, they are giving us more info here, but then let's look at it before we take our first question. It's also a type of what commission used as an incentive. So he said earlier on that actually commissions are basically an incentives that are used to encourage, right, sales officers to increase their volume of sales or their performance, in effect leading toward the productivity of the business. I hope that is clear. So that is actually what a graduated commission. It becomes an incentive because you're going to be paid at different rates at different levels of sales. You'll be always be willing to cover all the rates that you're going to be paid. So you're going to boost you or to encourage you as well, an agent or let's say as an employee, to work very hard to achieve these different levels of commission that you're going to pay. That's what we call graduated commission. So let's take note of that. So let's take our first example under graduated commission. Graduated commission. Abigail total sales for the month of January was $30,500. How much was her total commission if she is paid 20% commission of the first $10,000, 15% on the next $10,500, and 10% on all other sales? So here is a case that we know the total sales of Abigail for the month of January. Is that okay? And then this is how the commission is being instituted. This is how the commission payment is being done. Is that okay? I've been done, sorry. So here is a case, you have 20% to be paid on the first 10,000 sales that you made from the total sales, the next 10,500 from the total sales, and all other sales that aside 10,000 and 10,500 is going to attract a commission of 10%. So that's what they are actually talking about. So we learned that yesterday. We learned that commission is always your sales multiplied by the rate of commission. I hope you remember that. So since here different rates are being paid for at different levels of output or sales, this what makes it a graduated commission, or we call it a differential commission. So let's take note of that. So in this case, for me to know the total commission for Abigail is going to be, so total commission is going to be, so it's going to be 20%, all right, on the first 10,000 sales that Abigail made, which is 10,000 sales that you made, right? Plus, then we come to the next different rate, which is 15% on the next 10,500. This is how commission at graduated level have been calculated. So it's going to be 10,500. Is that okay? Plus, and then the last one, all that you need to do is to subtract the first two sales from the total sales of 30,000, and the difference you applied 10% on it as an extra commission rate that we are paying to Abigail. I hope that is clear. All right, so in this case it's going to be, so 10,500 plus 10,000 is going to give us 20,500. So it's going to be 30,500 minus 20,500. Is that okay? Multiplying, let me bring the rate here as 10%. I hope that is clear. So at this place you can say that our total commission is going to be, so what is 20% on 10,000? What is 20% on 10,000? Let's use a calculator and get it sharp. So 0.2 is same as 20%, right? Multiply by 10,000. You're gonna get 2,000. Okay, so let's take note of that. 2,000. So it's going to be 2,000. So $2,000. Is that okay? Plus, what is 15% on 10,500? Get a calculator here. Sorry. So it's going to 0.15 multiplying 10,500, and that's going to give us 1575. 1575. So it's going to be 1575 plus the remaining is going to be what? So the remaining going to be 10,500 minus 20. So going to be what? 10,000, right? So when you apply 10,000, when you apply 10% on 10,000, it's going to result to what? 1,000. I hope that is true. All right. So in that case, then we can say that when you sum all of them up, then let's see the outcome. When you sum all of them up, we expect you to arrive at this 2,000, right? And this 1,000. So that's going to give us more like 3,575 plus 1,000. That should give us. Let's check this. I'm coming. Sorry, I think I muted myself, right? So I said that when you add all of them, you should be able to arrive at what? 4,575 in that case. So let's take note of that. Let's take note of that. Okay, 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 okay. So the total commission is 4,575. Okay, okay. Now just keep it up. Epic girl. Okay, that was good. 10% is okay. Okay. Adams. Okay, that is good. Okay. All right, please let's invite friends to join this live session so that we can all learn together. So let's keep on inviting friends to join. All right, so let's take another question. Let's take another question on then graduated commission. So there we go. All right, so we have another question. A sales boy made a sales of what? $5,000 last month. Among his terms of trade, a he's been offered a different he's been offered a differential form of payment which consists of 10% commission for the sales of 2,000, 7% for 1,000, and then 5% for all extra sales made. Determine his total commission for last month. So total commission for last month, as we know, so we say commission is always your sales multiplied by the rate of commission, right? So total commission is going to follow the same thing as we did the just ended example that we saw. So it's going to be 10%. All right. So it's going to be 10% on $2,000. All right, plus 7% on the second 1,000 sales that you made, plus, so 1,000 plus 2,000 is going to give us what? 3,000. So 3,000 taken from 5,000, you should be left with what? 2,000. So it's going to be 5,000 minus what? 3,000. Is that okay? And then multiply all by what? 5%. So at the end of the day, we expect that here you should arrive at what? Sorry, that let's right. You should arrive at So 10% on this, it should arrive at what, 200. Okay, what is 7% on this? So what is 7% on 1,000? So you're gonna earn 70, right? I think it's 70. So 0.07 multiplied by 1,000 going to result to 70. All right, so let's take note of that. So it's going to result to 70. Then 5% on 2,000, you should arrive at, I think, is it 500? So 0.05 multiplying what, 2,000. Sorry, it's 100 rather. Okay, so it's going to result to what, 100. So 100. So therefore we can say that the total figure, or the total commission that a sales boy can receive, is going to result to what, 370. And then we are done. So that is the issue about the graduated or differential form of what, commission. So let's take note of that. If there is any question, let me know before I continue. Okay, Abigail, that's good. Keep it up. Okay, Abigail, that is good. So keep it up. But please, I hope you are following. Just follow through. Just follow through based on what we are present. Just follow through so that we can get it right. So just follow through. Just follow through. Just follow through. Just follow through so that we can get it right away. Just follow through. Just follow through. All right. So let's move on to the next type of commission we're going to discuss. The next type we're going to discuss is on what we call override commission. So please pay attention to this one. This type of commission is very important to me here. So let's pay attention here. And it contains some technicality that you need to be exposed to or need to be revealed to you, so that once you see them in any scenario, question, any situation form, you can easily deal with them and then you are good to go. Override commission. What is override commission? We are saying that override commission is also a form of commission or additional commission that we give to senior members within what, an organization. So senior members like supervisors or heads of what department. Okay, and this commission is based on, that's why please I've actually highlighted certain words here. It's being given, it's a commission that is being given to supervisors or heads of what department, right, based on store sales. So this commission is given to supervisors or heads of department within organization, and it's a commission that is based on what, store. All right, it's based on what, store sales, or it's based on what, the sales that, I mean, it's based on the representatives or those who work under that supervisor, the sales of those who work under that supervisor. That's why we calculated that commission on. And this commission is given to only senior members who are supervisors or heads of what department. So please, let's take note of that. It's given to supervisors or head of department within an organization, right? And it's based on store sales or the sales of representatives that work under that supervisor. So please, let's take note of that. Let's take note of that. So most of the time, going to hear of store sales. So anything about store, then we are talking about what, override commission. So you're going to hear store sales, store quota, store returns, and those stuff. So once you heard of it here and you're thinking about override commission, it needs to be applied as and when it becomes necessary. So this form of commission is given to supervisors or heads of department based on store sales or those that work under that supervisor. The sales of those that work under that supervisor is what that supervisor is going to receive as what, commission, together with his personal sales and other bonus are going to earn at the end of the day. I hope that is clear. So this form of commission is given to senior members within an organization, most times supervisors or heads of what department. So let's take note of that, please, and please, let's take note of this. So let's give more insight to it. So it's usually calculated as what, a percentage, right? It's get calculated as a percentage of the store sales after. So if there is, so store sales here, so if there is any store quota, is being taken off from the sales, and if there is any store returns to also deduct it from what, the store sales. Any amount that is going to be left, that's where we're going to apply the percentage on it, and then you get what, an override commission to be paid to a supervisor or heads of department. So please take note of this. It's usually calculated as a percentage of store sales after store quota, if it exists, being taken. So store quota, please take note of the store, not any other. So this is a store quota. We have personal quota there, but this is what a store quota. So where there is a store quota exists, you subtract from the store sales, and where there is a store returns, you also take it from the store sale. Whatever is left, that you're going to apply the percentage of that override rate, and then you get the commission for the supervisor or the head of department, if there is a scenario question in that case. So please let's take note of the store. So once you heard of store, then you should be able to know that we are talking about what override what commission, and it's being given to supervisors alone or heads of what department. So please let's take note of this. So let's take an example to clarify this whole thing that we are talking about. I think with that you get deeper understanding of what we are saying. All right, so there is a question here. Okay, so there is a question here that we want to discuss. Jasper, a senior supervisor at UPSA Mall, is paid a monthly salary of 2,200, a personal commission of 2.55 what? Personal commission of 2.55, and override of what? 4.5%. On the total store what sales, take note, on the total store sales above what? 60,000. I read again. Jasper, a senior supervisor at UPSA Mall, is paid a monthly salary of this. For this one, you know, monthly salary. A personal commission of 2.55%. For this one, you also know. And an override of 4.5% on total store what? Store what? Sales, right? Above what? 60,000. So this 60,000 also represents what? What does this 60,000 represent? So 60,000 represents what? A store what? Quota. It's a store what? Quota. So let's take note of that. If in a given month his total personal sales, so here's a personal sales, is 44,200, and his personal quota, so you see what I was talking about, there's a difference between personal quota and store quota. Personal quota is actually attributed to individual agents or individual what? Employees, upon which they are actually a standard that we set for them to achieve. But then there is also a store quota that we use to calculate a commission for what? Heads of department or supervisors. So always please take note of this. Personal quota, store quota, don't interchange the two. They are two sides of what? The coin. It's a different issues altogether. So don't always interplay with the two. Make sure that you stick to it and then apply them as and when it becomes necessary. So there is a personal quota for Jasper, and his personal sales was 44,000, and then his personal quota was 20,000. So they are asking us, what is his total earning if the store sales for the month is what? 115,000. So you see, you have what? Store quota, which is what? 60,000 here, and we have store sales of what? 115,000. Then there is what we call what? An override commission. That's the store what? The rate they're going to apply it on after taking into account if there is a store quota and then store returns from the store sales. That's going to pay us what? Additional commission to supervisors. I hope that is clear. So in this case, for us to determine the total earnings of what? Jasper, in this case, is going to be his salary plus his personal commission plus his override commission that's been paid to him as a supervisor. I hope that is clear. So in this case, let's take them one by one so that we get to understand the whole issue. So we can say that for his personal commission, I call it at what? CP, it should be, so actually there was a personal quota, so it's going to be commission amount multiplied by the rate of commission. We say commission amount is what? The sales minus what? Quota, if it's a personal commission we're talking about. So here I can say that his commission, personal commission, is going to be, so what is commission amount? Commission amount is going to be sales. So the sales, personal sales, is going to be what? 44,200, okay, minus the personal quota of what? Personal quota of what? 20,000. All right, and then you apply the rate as a personal commission rate, which is what? 2.55%. Is that okay? So let's take note of that. Please, I'm coming, okay? Yeah, so let's continue. So as I've said earlier, I'm sorry for this, direction that I need to correct it before we move on. So as I've said earlier on, the personal commission is going to be 44,200 minus what? The store quota, sorry, the personal quota. Is that okay? The personal quota of 20. So in this case, let's work out and see. Let's work out and see. So it's going to be 44,200 minus 20,000, all right, and then multiply by 2.55%. We're going to get what? 617 point what? 617.1. So that becomes the personal commission. That becomes the personal. So personal commission is going to be 617.10. So that becomes the personal commission of what? Jasper. So let's take note of that. So once you're able to get the personal commission, you want to find what we call the override for Jasper. Is that okay? So let's find the override commission for Jasper. So with the override, all right, so I'll call it as commission on what? On sales. So it's going to be, so here too is going to be the store sales, which is what? 115,000, all right, minus store quota. If it is, that was what? 60,000. So store sales above what? 60,000. So that's going to be what? 60,000. Is that okay? So if there was any store returns, we also take it from the store sales, so that we apply the rate. So multiplying 4.5 as our override what? Rate. So what is going to be the end result for this? So let's deal with it and let's. So 115,000, right, minus 60,000. Is that okay? Multiplying 4.5%. So that's going to give us what? 2475. 2475. That's going to give us what? 2475 as an override what? Commission. So therefore, in determining the total what? Earning that Jasper will earn at the end of the day is going to, so total earning is going to be his monthly salary plus his personal commission, right, plus his override commission. That's commission on what? Store sales. So let's see his monthly, so monthly salary was what? 2,200, right, plus commission or personal commission, which was what? 6,000, sorry, 617.1, plus his commission on store as well, an override commission, which was should be what? 2,475. I hope that is clear. So when you add all this, you should be to arrive at, so let's see, you should be able to arrive at a total amount of 5,292.10 as the total earnings that Jasper is going to earn at the end of the day. 5,292.10. So that is the total going to earn at the end of the day. So let's take note of that. So if there is any question, please let me know before I continue. Okay, Nanajo is saying total earnings what 5,290. That's great. Keep it up. So that's what you're going to arrive at when it comes to this as an override commission. It's actually very simple. So always where there is a store quota and store return, just take it from the store sales and then apply the rate of for the override, and then you get what the override commission for the supervisor in that case, and then add up if there is any uh salary, you add up to it. If there is any personal control, also add up, so that you get to determine the total earnings of that supervisor. I hope that is clear. So that is something you need to know before you can move on. So guys, if you are just joining us, you're welcome back. Like this video, please go ahead to like this video. Okay, make sure to like this video. You haven't subscribed to, make sure to subscribe to the channel, so once we go live you're able to get notified and then you're able to join us in like. So let's keep on also sharing this video to friends so that they can also join us in that case. Okay, Adam, that's great. Keep it up. 5,292. That's great. So let's keep it up. Let's keep it up. So there's another question on the issue about override commission. Override. All right. So with this one, to follow the same trend, right? So here, KB, head of department at LPC Premier Boutique, LPC what Premier Boutique, is paid a monthly salary of 3,200, a personal commission of 5%, an override of 3% on the total store sales above 63,000. If in a given month his total personal sales is 43,200 and his personal quota is $25,000, what is his total earning if the store sales for the month was 100,000? So here you have a store sales, right? And then we have total store sales above 63 is the store quota. I hope that is clear. And then we have the override rate of 3%. All right, and we have other issue that we can think of. All right, so let's determine the total earnings of KB, who is a head of department for LPC Premier Boutique. So in this case we're going to follow the same trend. We're going to calculate our commission, personal commission. So personal commission CP is going to be, so that's going to be, so we know the personal sales was 43,200. So it's going to be 43,200 minus, was there any personal quota? Yes, there was personal quota of $25,000. So that's going to be $25,000, right? And then multiply by the rate of commission is personal commission of the rate of 5%. You multiply by that. I hope that clear. So per my calculator, I arrive at the commission of $910. I hope that is clear. So that becomes my personal commission for that I will pay to KB as a head of department. So let's come to his override, because he's a head of department. We said override are commissions that are paid to supervisors or heads of department, senior members within the organization who are supervisors or head of a department. So once you don't head of supervisor, you're going to head of heads of a department or head of a department, and you should be able to know that they are going to receive an override commission. So let's calculate the override commission. So I call it as commission on stores to be given to the supervisor, in this case KB. So that one too is your store sales minus any store quota, and if there is any store returns, you also take it out from there before you apply the override rate, and then you are good to go. So realize that there was a store sales of $100,000, all right, minus, so there was also a store quota of 63,000. So 63,000. Was there any store returns? No. So just leave it like that and multiply by 3% as our override rate. So with my calculator, I arrive at a commission on store as 1,110 as a commission on stores. So that becomes the total commission on store, and that's of personal commission of 910. So for now, for us to determine the total earnings of what KB, who is the head of department, is going to be his monthly sales, sorry, monthly salary plus the commission he earns as a personal commission plus the commission he earns as on stores, as he being what a head of department in that case. So therefore, we can say that total earning is going to be salary plus commission, that personal commission plus commission on what stores. So what was his monthly salary? Monthly salary was what, 3,200 what dollars, plus the commission that he earned on personal basis was what, 910, right? Plus commission that he earned on what, on stores, that was also what, 1,110. So in that case, you should be able to arrive at an answer of, so with my case I had $5,220,000 as the total commission to be paid to KB as the head of what department. So if there is any question that I need to know, please put in the comment section so that I can answer you right away. So thank you once again also for joining us today. We are grateful for having you here. So if you haven't liked, please make sure to like and then subscribe to the channel so that we can move on in that case. So thank you once again. So if there is any question, let me know before I move on. Okay, Seth Mensah is saying total earnings what, 5,220. That's great, keep it up. Abigail to, as that was the first question. Okay, sorry, the second question I resolved. Okay, that's great, keep it up. Abigail, keep it up. 5,220. Okay. So let's move on to the next type of commission. I think I'm going to the last one, then we talk about other issues, and then we are done for today. Please, let's keep on sharing this video so that we are good to go. I hope that is clear. So let's talk about our last type of commission. You have outright and rebate as another form of commission. So this is also another form of commission that we paid on purchases or gross or net sales of a business. So here, this is a form of commission that is being paid to an agent as he being a seller of the goods on behalf of the organization, or being received as a discount to a buyer who buys what, goods from us. That's why you see that as commission or what, discount. So it works on both sides. It's a commission that we pay to an agent who is what, a seller or an employee of an organization for selling what, goods to customers, or a discount that is being received by what, a buyer for buying certain amount of goods, or by buying an amount of goods above certain standard that we as an organization would like to actually give a discount to him or her for exceeding that limit. So actually, with this type of commission, is actually applicable in real life situation. At times you may went to, let's say, an organization, let's say, or let's say you went to store and you want to buy something. They will tell you that, okay, if you are to buy up to this number of quantity, you're going to give in what, this number of what, discount, as a way of reducing your cost. But if you fall below, then you're going to earn a discount. So that's why we call outright commission and rebate. So it's actually, if it's on the side of the buyer, then they will give you a standard. If you are to buy this amount of quantities, you're going to give you a discount of, let's say, 10%. If you're not able to meet, then you earn at that discount. That's on the side of the buyer. But then it becomes a commission to the seller, where he's able to what, sells an amount, or an employee or an agent where he's able to sell an amount of what, goods at certain standard. That's where we know as what, quota. And any extra sale that comes out after the quota, that's where you earn what, a commission. So we call it outright commission and what, rebate. So it works on that. So it's been applied on purchases or gross. So that's why you see purchases on the side of the one buying, or the seller, what you made for the period, or the net sales, the sales that you made as a seller or a buyer. So it works on both sides in that case. So let's take note of that. So they give you more information. So they are saying that it's also a type of what, a trade commission, and usually a fixed percentage of the total purchases or the gross or net worth sales for the period. So fixed percentage actually. So you should be able to understand it from that perspective. So let's take note of that. So let's take a first question. If there is any question, let me know before we take the question. Okay, Estaba is saying that how can I get the previous videos? Okay, they are on the description section of this video and also on the playlist of this channel, so you can check the playlist of this channel so that you can get all the videos and then you can watch it later on in that case. All right, so let's continue. So MBK supermarket gives what 8% rebate on all purchases above what 1,200. So this becomes what a rebate what quota, that if you're able to actually buy our goods above 1,200, you earn what a discount of 8% if you're a buyer. Now you have bought goods of what 2,220.45 from MBK supermarket. What was his rebate? So you're asking of what was what discount that we give to what Yao, as he was able to exceed the standard of purchase of 1,200. I hope that is clear. So we call it as rebate commission, which is going to be, so here is going to be the commission amount multiplied by the rate of what the commission. So in this case, the commission amount is going to be the number of good that you was able to buy, taking into account the quota for purchasing that good or that goods. I hope that is clear. So here is going to be Ghana cedis, so it's going to be what 2,220.45 minus the purchase quota, which is what 1,200, and then multiply by 8%. So you realize that you are qualified for what a rebate or a discount of what 8%, because he was able to buy an amount of goods that was more than the standard that is set for you to purchase to earn what a rebate or a discount. I hope that is clear. So here, as you know, there's a normal commission, straight commission or normal commission question that we actually be. So that is how it works. So here is going to be, so when you apply 8% on the difference between the two, with my case I had so with my case I had a rebate commission as 81.64 Ghana cedis. Actually going to have 81.63, I didn't say 36, and when you convert to two decimal place, you would arrive at what 81. So let me have it done properly for you. You're going to have something like this: 81 point what say 36, right? So when you convert to two decimal, it's going to result to 81.64. so that becomes what the rebate for Yao as a discount for exceeding the standard of purchase. That's the quota for earning the rebate or the discount, which is what 1,200. So you see what I was talking about. Actually, this is actually used in practice. It will tell you that if you're able to buy above this quantity, you're going to give you a discount of, let's say, this, and then you earn. If you're not able to buy, then you earn a discount and you are good to go. So I hope that is clear. So that is something about outright commission and then actually rebate. So let's take note of that. So let's talk about the issues of draws. So there are times where you being an agent or an employee, is that okay? Okay, let me take some questions out before I continue. Please, is there any question before I continue? Is there any question before I continue? Is there any question before I continue? Okay, Adam is saying that please, assuming that his personal quota is more than his personal sales, how do we calculate his total earnings? So okay, Adam, you're saying that assuming that, I think I've spoke about this, that was it that of yesterday or today. If the personal quota is more than the sale, then the person cannot earn a commission. If the personal quota means the standard that we set for that employee or that agent, he couldn't able to meet it, so at that point his personal quota becomes more than the sale, so at that point he cannot earn a commission. So the only earnings going to be his salary, if he's paid salary, is going to be salary going to end at the end of the day. I hope that is clear. So that is something that we need to know. So let's take note of that. So let's continue. I think Adams, I hope I've answered your question. I hope you are fine. So let's take note of that. So let's talk about the issues in relation to draws. So there are times where you've been an employee, an agent, that you have been hired by an organization, okay, that there are times where, though your work that you have been given to work on, you haven't completed yet, right? But then you are in financial difficulties. There is such, if there is a policy within the organization that allows members to have some funds to meet their financial difficulties before their commission is paid, then fine, you can go for what, a loan. So draws are basically loans that an agent or an employees of an organization can actually undertake if it's a policy of the organization to give what, loans, so that they can use to meet any financial difficulties they may actually engage on in their operations or in their dealing with what the firm. So draws are actually given to employees to caution them against any financial difficulties. So you'll be actually given that chance to come and make what, or to come and obtain loan from that business if it is a policy. But if it's not a policy, then there is no any amount that you can earn as what, loan. So at the end of the day, once the work is done and your commission work, I mean, you have actually done it, and there is any drawings or any loan that you borrowed from the organization, before your commission is going to be paid, at the end of the day, you are going to subtract your drawings or your draws or as a loan from your total earnings before any amount is given to you as an amount you're going to take home to enjoy with your family. So actually draws an amount made available to sales officer or agent as loan against any future commission that the officer or agent would what, earn. And then, as I've indicated, it may or may not attract what interest. So at times it may or may not attract interest. That's fine, because loan for loan, when you even go to banks, you may pay an interest, but it depends on the organization. It may or may not attract what, an interest. So whether it attracts an interest or not will depends on the organization making the draw available or making the loan what, available. And as I've indicated, if it's a policy of organization to make some funds available to aid employees or agents in order to cushion them against any financial difficulties, then fine, you can go for it. But if there's such none like such policy available, then there is no way you can get any loan to cater for your. But then in most organizations, in real life situation, you see that there's an avenue that allow members to go for loan before even they are paid, and then that's going to be deducted from their salary or total earnings at the end of the day. Is that okay? It's like professional, like teachers, like say, if let's say there are some teachers, you might see them in their vehicles, fine, but then some of them are on loan terms, so they'll go for, because they are paid monthly salary and other earnings and it pass through the controller, they will go for, I mean, a vehicle, and then they will be actually deducting an amount on a periodic basis from their salary before they're able to pay the amount. So that's an example of a draw or loan here I'm talking about here. So let's take note of that. So the aim of the draw, as I've indicated, is to provide what, cushion for employees against any financial difficulties. That's why we institute what, this form of policy they may face. So such amount, as I've already indicated, before we can pay you any earnings at the end of the day, we will subtract that amount that you actually engage on. It's like an advance payment in the form of loan given to you. You subtract that amount from your total earnings at the end of the day before any amount that's left we pay to you as a take-home pay. Then you are good to go. So such amounts are deducted. Are deducted from the total earning of the sales officer or agent before they are what, paid. So that becomes what, a draw or draw. So let's take note of that. So on that, let's take some question here so that we are good to go. If there is any question, please let me know before I continue in that light. Fali is saying that so won't work out. No, come again. I think that's what the moderator said. He said come again so that we can clarify your question. Discount given is, which discount are you talking about, Adams? Come again. Okay, so let's see the question out in relation to drawing. Musa is a representative of a supermarket. He receives a monthly salary of what, 8,500 Ghana cedi plus 5.5 5.75% commission on all sales exceeding what 37,400. Last month he made a total sales of what 84,000. How much was his take home earning if he has a draw of what 55 550 Ghana cedi against his name? So here is a case that Musa, before he was able to earn his commission, has made a draw of what 550 Ghana cedis, and then now is the time they're going to pay him his earnings. So they are asking us what's going to be the earnings of Musa to take home if he has a draw for 550 against his name. So it's very simple. You have already dealt with the issue about personal commission. So here, if this is a personal sales quota, you take it from your personal sales, total personal sales, and then you apply the rate on it, and then you earn what a commission. So in this case, let's first of all calculate our commission. So personal commission for Musa is going to be the sales that he made for the period is 84,000, right, minus the quota, which is what 37,400. I hope that is clear. Multiplying the rate of commission, which is what 5.75%. 5.75%. So with my case here, I had a commission to be 2,679.5. That is what I had for as a commission for our personal commission for Musa. I hope that is clear. So now let's determine the total take home for Musa. So total earnings to take home for Musa is going to be his salary plus his personal commission. Was there any other incentive that he earned? No. So these were the two incentives they're going to earn as a what? An earning. So but then there was a draw that was against his name. So you take that draw from it. So minus what D. Is that okay? So we know the salary was what? Salary was 8,500 plus his personal commission of 2,679.5. All right, minus, so this was what I was talking about. He took that loan in advance before he was actually paid his commission. So before we know the amount we're going to pay to Musa, at the end of the day, we're going to subtract the draw that he made in that case. So it's going to be 550. So with my calculator here, I had the total take home pay for Musa to be 20,629.5. That is what I got for take home or total earnings that Musa will take home, as we take into account the draws that he made for the period. So let's take note of that. If there's any question, let me know before we continue. Okay, that's great. Abigail, keep it up. That's great. Yeah. Samuel Kunsin, please come again. I think come again with your answer so that we are good to go. So please, if you haven't liked this video, please like this video for me. It's very important so that YouTube can also push this video for others to learn. And you haven't subscribed, make sure to subscribe to this channel. So once you go live, you get notified. Share with your friends so that we can get more engagement, and like as well. So let's deal with the latter part of our issue that we are talking about in that case. What are you talking about? Okay, personal commission that I think Kumsin was talking about. Okay, that's great. But then I was thinking that you were talking about the total earnings. Okay, that's good. I think Kumsin was talking. I think Seth also talk about the same thing. That's good. Keep it up. So let's talk about dealing with returns. So there's a latter part of our presentation here. So you realize that there are times where when sales are made, right, to customers, right, when sales are made to our customers, right, there are some situations where that customer may return the goods back to us. What are some of the situations? It might be that, hey, the customer don't like the product or the service that we actually render to him or her, or so in this case the product that we actually sold to him or her, okay, or there is some default in the product, or probably it's damaged or broken. These are the things that will account for a customer to return the goods back to the organization. But then, even if with that, in real life situation, if it is a policy of the organization to actually informs you as a customer that hey, for our goods that we bought is what non-returnable, meaning that once you buy that good you can't return it, then you cannot return. But then if the policy of organization that hey, once you buy the goods and there's some default, there's some damages, there's some broken, or there's something that you don't like about it, you have that luxury to return it back, then you can return it back. That's what we call what returns. So returns are actually goods that we sold to our customers, in which due to one or the other they may return it back to the organization. It can be, let's say, as a result of default, or let's say as a result of damages, or it has been broken, or other things. I mean, maybe let's say the grade that they ordered, we couldn't able to meet up the grade, or I mean the type of the product, a whole lot of issues that always accounted for returns within an organization when it comes to what selling of what products. I hope that is clear. So returns are actually goods that customers will bring back to the organization or the shop when as a result of they being faulty or what damage. So once there is a return and we get to know the agent or the employee that's actually made that sales to that customer, we will want to take into account, because you want to calculate your commission at the end of the day. So for us to calculate your commission at the end of the day, we are going to subtract that returns from your sales, because it's something that we couldn't able to sell to get money, because at the end of the day that customer bought it. So it's going to reduce our sales. We're going to subtract it from the total sales for the period. Is that okay? And then you calculate your commission. I hope that is clear. So where returns exist, our commission amount is going to be sales minus return. But then where returns of sales exist, quota also exists, then our commission amount in this case, as you can see here, is going to be quota, that is sales minus quota minus what returns, and then you get a commission amount upon you're going to apply the rate of commission on it to earn what a commission. So that's the issue about returns. So at any time there is a return, you see any return figure within any scenario, within any question, you subtract it from the sales. And where there is also quota exists, as usual, that you know, if there is a quota, you take it from the sales, and then you are good to go to get your commission amount. Then you apply the rate of commission and you are good to go. So that's the issue about returns and then quota. So this mostly at times on personal basis, on personal what basis. Remember, we have the override that I explained, that you may hear of for store, let's say store sales, store quota, store returns, whatever store. Once you heard of that, then that commission is being paid to supervisors alone. Please pay attention to that one for me. That once you heard of store returns, store quota, store sales, and those stuff, it is a commission that we pay to supervisors alone. So you must act according to it as and when the information in the question are necessary for you to apply. But then once you heard of, let's say, returns, personal sales, personal this or that, then you are talking about an individual commission that you're going to pay to actually an agent. But then if it's store return, store thing, then you are thinking of override, and then that is only going to be given to supervisors or head of department. So that is the issue when it comes to these things that we need to know. So that is return. So where returns exist, you take it from the sales. Where quota is also take it from the sales, and the remaining amount you applied your rate of commission, and you're able to earn what a commission. So we call it a commission amount. So commission amount where quota and returns exist is going to be sales minus quota minus returns, and then you earn your commission amount. You apply the rate of commission, then you are good to go. I hope that is clear. I hope I've clarified every question that you have in mind. So let's take an example, and then we are good to go. If there's any question, let me know before we get started. If you just join us, you're welcome, but then you can still watch the playback of the video. Kindly make sure to like this if you haven't liked, subscribe to the channel so that we can all engage, and share with your friends as well, so that we can, that is a good way to learn. Once you share with your friends, you also learn, also help them to learn, so that they all move together. All right, okay, so let's take note of that. So let's take our first example before we continue. So let's take our first example on dealings with what returns, so that we are good to go. So a sales agent receive a monthly salary of for 2,450 plus a commission of 4.8% on all sales above what 25,000. So this is why we call a personal what quota. You know that personal rate of commission, then this is salary. All right. What is the total earnings if the total sales for the month is 65,000 with a returns worth 4,500? So there was a returns of sales that, let's say, we sold, that sales agent sold to a customer, but then that customer returned it. So for us to know the total earnings, first of all, let's determine the commission of that sales agent. So commission, personal commission, is going to be the sales, right? In this case there was a return, so sales minus quota minus what returns. I hope that is clear. And then multiplying by the rate of commission, which is what 4.8. So therefore our personal commission is going to, I know our sales to be what, total sales was what 65,000. All right, and then personal quota was what 25,000, and then personal returns by the agent that sold the goods to the customer was what, so I'll call it a personal returns or returns of what 4,500, and then multiply by the rate of which is what 4.8%. I hope that is clear. So in this case with my calculator that I computed, okay, I had a personal commission to be 1,704, so 1,704 as a personal commission for that sales agent. So now for us to determine his total earnings is going to be his monthly salary plus his personal commission. I hope that is clear. So in this case, I know his monthly salary was what 2,450 plus his personal commission of 1,704. So in this case, the total is going to be, with my case and with my calculator, I had a figure rounded on 4,154 in that case as my, or as a commission total earnings for the sales agent, taking into account the returns and quota and then his monthly salary into consideration. So let's take note of that. If there is any question, as usual, let me know. If you haven't liked, please make sure to like this video and then subscribe to the channel, share with your friends and learn alongside. So please, if you are encountering any problem with regards to your network, after this section the video is going to be available so that you take your time and watch the playback so that you can get everything perfectly, so that we can all move on together. So that's what I'm expecting from you. Just take your time and watch the playback once again so that you can all get everything that we have learned so far, and then you are good to go. So let's take note. Okay, Seth Mensa, you said that it's 1,704. Okay, that was personal comment. That's good. Keep it up. Like us all so that we can get engagement on the. So as usual, that is all for commission. That is all for commission that you need to know at this level. That's all for commission that you need to know at this level. So guys, I'll see you. So if you haven't liked, make sure to like. So thank you once again for joining this live session. I'm grateful to have you here, always coming your way to assist you guys and also to give you some direction that you need to know as you climb up your academic ladder. Okay, so you can also recommend some topics that you want us to treat, so along the way we can assist you guys. And then one thing that I forget to tell you guys, that always I want to know where you are watching us from. So if let's say you are watching us from Ghana, you put in a comment section, like let's say, hey, I'm watching us from Ghana, there's my question here and there. I'll be glad to hear those comments. Or let's say I'm watching you guys from, let's say UK, let's say USA and those stuff. I'll be grateful to have those information, knowing that we are doing much more work to assist the world at large. So guys, thank you very much. If you haven't liked, make sure to like this video and subscribe so that we can all learn together in that case. So thank you very much. So I'll see you in the next session, probably tomorrow the same time, and then we'll start with the issue about trade discount. That's going to be our focus, God willing, tomorrow morning. So just watch the playback so that you get everything. And if you couldn't able to watch that of yesterday's own, kindly make sure to go through so that you get to understand everything. So I'll see you guys. For now, bye bye. Thank you for coming.